Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for now, the markets are looking a bit wobbly. And I say that because the global markets are also under pressure. If you look at the futures right now in the US, they are showing a bit of a red tinge. And even the European markets have started on the back foot. Remember that all-important meeting is underway between the US President Joe Biden and, of course, the Israeli Prime Minister Netanyahu as well. So that is something that the global markets are tracking very, very closely. Amid that, Indian markets are also falling in tandem. So you have Nifty, which had slipped below the mark of 19,700 on an intraday basis, and bulk of that fall is thanks to the Bank Nifty. So that is where the real pressure is right now. Bank Nifty is down almost 400 to 500 points. And look at those heavyweights. HDFC Bank, ICICI Bank, both of them are the biggest drags on the index right now. And even the likes of Bajaj Finance, Kotak Mahindra Bank from the financial universe aren't doing much. Bajaj Finance was an okay set of numbers, but the street is not willing to give the benefit of doubt today. Sharp cuts are also seeing in other sectors as well, but what is bucking the trend today is actually pharma. So that's actually holding out. A Cipla, a Dr. Reddy, Sun Pharma, these are the stocks that we're watching out for, which are holding in the green. A lot of result reactions as well. So, of course, from the IT world, we saw the guidance cut come by for the likes of L&T Tech as well as Happiest Minds. So those stocks are down in the trading session. Syngene, of course, is taking it on the chin with a cut of almost 7% after they also reduced their guidance, and the outlook is a bit skittish. IIFL Securities, that one is flying away in the trading session. Good operational performance coming in. Tata Elxsi was a bit of a beat versus the expectation as well. And look at that surge on Huhtamaki as well. So all of these stocks are holding up. So a lot of earnings reaction actually coming in, Aisha. But overall, at the index level, it still continues to be fairly quiet.
It's fairly quiet at the index level, a bit of a chop and churn like you highlighted from pharma at one end holding up, and on the other hand it's the heavyweights like banks which are really tugging on the markets lower. And in fact that's pretty much the case with other blue chips like a Reliance as well, which are currently down about almost 1%. There's of course Bajaj Finance. It's now at the session lows. It's almost a 3% cut that you're seeing on Bajaj Finance, no less. 2.5% lower in the spot market right now. So yeah, it's really a tug of war at both ends. But having said that, there's Hindalco, wherein the OFS has got fully subscribed now. Remember, the OFS is currently underway. The floor price was fixed at 79 rupees per share, which is a 12% discount to yesterday's CMP. There was IIFL Securities, which came out with its numbers, and a staggering one at that. Almost a 60% jump up is what you've seen on their top line, and the PAT as well has come in higher by nearly 93%. So yeah, a few odd outliers definitely out there. And then of course there's Biocon as well, wherein Syngene has cut the constant currency growth guidance. Both Syngene and Biocon are the stocks which are under pressure. But let's really take stock of what's happening in the market and why this shake off at a time when Europe has actually started off on a quiet note. Yes, the handover from the global cues this morning or how Asia was panning out was not really the best. You did have a little bit of softness, but I think we are the region underperformers. Kunal, almost breaching 19,700 now. Any reason to get alarmed?
Well, not on the Nifty front, but yes, on the Bank Nifty front, definitely something to get alarmed, because today you have not just HDFC Bank, which is underperforming, but even ICICI Bank, Axis Bank, which have reversed quite sharply from their intraday highs. And the more critical part is that the Bank Nifty is now on the verge of breaking below its multi-week, multi-day support of that 43,700 odd level. So 650 approximately is on the spot basis for the Bank Nifty, the critical support, and we are just I think 200 points away from this critical support. So I think that's one of the major reasons why I believe that the view for the Bank Nifty could now change to be on the negative side if you manage to break below this 43,650 mark.
But Kunal, is there more weakness, let's say, in the PSU banking names, or it's the private heavyweights which you think are looking weaker?
So for a change, it's both, because private sector banks, of course, that even with the news flow for HDFC Bank, etc., these stocks have underperformed. But what we've also seen as a pattern emerging with the last 1 or 2 weeks is the larger cap PSU banking names likes of SBI. The stock has corrected some 5-6% from the recent highs of 600. Bank of Baroda is down some 8%, 9%. Even the likes of Canara Bank has ebbed off by more than 4 to 5%. And the mid-cap end of the PSU banking stocks, the likes of say PNB, Central Bank, etc., even these stocks have corrected somewhere around 10 to 15% from their recent swing highs. So there is a definite amount of weakness which has creeped into the PSU banking stocks also relatively in the last 1 or 2 weeks. So It's, earlier it was limited to just the private sector banks underperforming and PSU banking stocks managing to balance it out. But this time around, it's both the ends of the bank Nifty which is actually showing signs of weakness.
Right, okay. That's the take coming in on the Nifty Bank. In fact, let's bring on board Pawan Parakh, the Director and Fund Manager at Renaissance Investment Managers, joining in on the show right now to help us decode what's really happening in the market. Pawan, hi, afternoon. Help us understand what's really causing this kind of weakness and underperformance, if you will, across the private banking large cap names.
Hi, Aishka. Thanks for having me on the show. I think as far as this large cap private banking space is concerned, the stock has been fairly valued, and I think the entire sector is in the best of its trade cycle as of now. It's highly doubtful how long will this trade cycle continue. In that kind of backdrop, it is advisable to at least as far as we are concerned, we are kind of underweight banking as of now because we believe we've seen the best results from all of these companies, be it HDFC Bank, be it ICICI Bank, be it any other BFSI franchise. Growth will actually kind of moderate from here on, and more importantly, trade cycle is going to be far more. It's not going to be so much benign as it has been in last 3-4 quarters. So I think a lot of these investors are taking stock of these things, and that is the reason it making them kind of nervous at this level.
Okay, a lot of these things making the investors nervous. Quickly, let's pull up the stock of Polycab as well. That has been a solid performer this year. Let's pull up the YTD chart if we can of Polycab. Today, of course, it's coming under pressure after it reported a largely inline set of numbers. So it's a bit of a sell-on news which we are witnessing. But look at that surge. Over 100% gains. So the stock has doubled this year already. Nooresh, come in on the chart of Polycab. Also the pharma names, because Cipla today is doing quite well for itself. 3% gain.
So Polycab has been making a classical topping out fashion formation as such. It's forming a rising wedge, wherein every time it has made a new high above that 5,300 mark, it has not been a very big high. So it made new highs over the last almost 1.5 months. And today is a first indication that a reversal is in place. And once it breaks 5,200, that would be an indication of a major top being in place and could see a much larger correction. So it's actually a short at higher levels on any bounce with a stop loss at 5,500 and could be looking at much lower levels going forward. So a decent correction could build in here. On the pharma names, say Cipla has been showing a lot of strength on a medium-term basis, but on the short-term basis, along with the news, the stock sees a lot of volatility. So would be on an avoid, but Sun Pharma and Dr. Reddy are the ones which look very promising. So Sun Pharma for the last roughly 2 months has been in a very tight range of 1100 to 1110 on the downside, 1160, 1170 on the upside. So making a classical range breakout possibility going forward. And then if we go a little longer, the stock had topped out around this 1150, 1200 mark back in 2015. So that could also be a 8-year breakout in this case. And the stock could make a much larger move going forward. Same is the case with Dr. Reddy's making a falling, say, a trend line breakout about the 5,600, 5,650 mark. So this could go towards 6,000. So the large cap names in pharma look interesting now.
Right, since we are on the subject of pharma and we just flagged off Cipla, the fact that it's a strong chart today, and just by the way, Cipla has a very strong dominance in the respiratory diseases or treatment of that. So let's talk about that. Given the AQI levels in Mumbai, God forbid we need actually some of those. We have with us Dr. Kavita Mehta, consultant pulmonologist at Nanavati Max Hospital, joining in on the show right now. Dr. Kavita, great to have you today on ET Now. Thank you so much for taking the time out. Mumbai's AQI, as we speak, it's even worse than Delhi, which was traditionally supposed to be, the worst air quality across the country. Help us understand, what are the do's and don'ts and pros and cons, that one can seek out, given that AQI levels were as bad as 249 this morning?
Yeah, hi, thanks for having me here. So the AQI levels are increasing a lot in Mumbai. So the main causes for that is the industrial combustion. Then there is a biomass waste and the burning of the public waste. So the thing is that the things that we can do to avoid this is that we should not burn the waste in the public areas. You can use your mask when you go outside, and then you can do carpooling. Road traffic is a very major factor contributing to this. So what we can do is we can do carpooling at the same time to decrease the road traffic as well as avoid the pollution.
Have to get back to our N95 masks, or you think a regular mask would do?
I think we should use a N95 mask, and the mask should be well fitted when you use it. And it is more advisable in people, who are prone to allergies and those who have underlying respiratory conditions like asthma, COPD.
Have you actually seen a rise in the cases in terms of all of these, allergies or any other cases coming in? Because as a separate note, of course, we had seen those alarming numbers when it comes to dengue as well. Are you seeing more increase even in the asthma and other cases?
Yeah, sure. So the air pollution also contributes to COPD a lot more than the tobacco smoke does. So there are definitely increase in number of the cases. And along with that, the people who already have asthma, COPD, and who are immunocompromised, they come often in OPD with increased exacerbations. So they have increase in cough, breathlessness, dizziness, headache. All these symptoms do happen.
Dr. Kavita, the other thing is, are there any precautionary measures that one can take besides, of course, masking up and, maybe not going outdoors as often? Are there any supplements or vitamin C, etc., that one can take just in order to, boost our immunity?
Yeah, so, I would also want to add a point here that we talk about the AQI and the outdoor air pollution. So there is something also called as the indoor air pollution. So the thoop sticks which we burn, the agarbattis, mosquito coils, these all also contribute for the pollution. So at indoor level, you can avoid using these things at home, which will improve your lung health definitely. And along with when you talk about the outdoor air pollution, I would definitely ask people, to get vaccinated, see your physician and get vaccinated for the infections like pneumonia and flu.
Doctor, thanks so much for joining us. On that note, we let you go. Appreciate you making time for ET Now and its viewers. So that's the word coming in, mask up, because of course the AQI levels in Mumbai have become a lot more worse. But let's toss that question to Pawan as well. Pawan, in terms of the pharma companies purely, what's your take as to which stocks do you think are likely to be outperformers?
Yeah, so without going stock specific, let me highlight my views on that sector level. And I must tell you, pharma is something we find quite interesting at current levels because as far as you see the largest market in the world, which is the US market, we are already seeing some sort of drug shortages selectively in US. And apart from that, over the last 1-2 quarters, we are already seeing that price erosion trend that was happening over the last 1-2 years that has got arrested. So in fact, in select cases, we are even getting price appreciation. So in that kind of backdrop, export markets look good. Domestic market, there could be intermittent slowdown, but if you take a slightly medium to longer term view, it's been a very resilient market. And pharmaceutical spend in India, we are deeply underpenetrated. And actually, if you see over the last 1 or 2 years, I think that was one sector wherein the valuation was very comfortable versus a lot of the other peers. So overall, we like the pharma sector, and considering the current volatile times in which we are living, especially on the global front, it makes us a good defensive bet to have in the portfolio.
Okay, so that's the take coming in as far as pharma sector is concerned. In terms of the other stocks, let's pull up the stock of Godfrey Phillips as well. The numbers from VST Industries were out. That stock is not reacting much, but Godfrey Phillips, of course, is in focus. And tomorrow, ITC comes out with its earnings. And of course, that will be very important to track as well. Nooresh, what's your sense on ITC, VST Industries and Godfrey Phillips?
So ITC has been more sideways for quite some time now, but near term, if it can sustain above 460 levels, that would be a short-term breakout. 435 to 460 has been the range for the stock and did not see follow-up action on that 435, 440 mark breaking down. So overall, bias would get positive if it sustains 460. Godfrey is the most interesting one out of these names. So Godfrey Phillips gave a breakout a few days back, did a pause for the last 5 sessions, and now is making a fresh move into a new all-time high. The stock had previously made a top around 2150 in the start of the year, and then came very close to 2150, 2200, paused for the last 3-4 months, and now a breakout move has started. So this could be a stock buy at current levels as well as on dips to 2250. Upside could be closer to 2600 to 2800 in the short term.
Some other movers in trade, while Syngene, Biocon, of course, are feeling the heat. There's ABB as well after ABB Global coming out with their earnings commentary. Piramal Enterprises, that's also done about over 3.5% or so. Cipla, of course, is holding out. There's Dr. Reddy's, which is looking smart. Tata Motors continues its up move. GNFC saw a big move yesterday. Today, too, it's seeing a follow-through of nearly about 2%. And then there's Sun TV, which after hitting a 52-week high yesterday, today too it's scaling higher by another 3%. And Nooresh, I recall you had a buy call on Sun TV yesterday, right?
Yeah, so it was a buy call a couple of days back as well as today. So the stock looks interesting because if you look at the price action, it has moved up from 430 to 450 in a very slow and steady manner over the last 3-4 months. But crossing 600, 620 implies it's crossed the highs made last in 2019 as well as in 2021. So this was a high which was tested multiple times, and over the last almost 2 years, every time it would come to 550, 600, it would flop and go back to 400 levels. So seems like a major 3 to 5 year breakout here. And this could ideally, on a medium-term basis, take it towards 750, 800 also. My short-term target for the stock would be 700. Now a revised stop loss would be placed at 640.
Taken on Sun TV, but Pawan, what's your take on the real estate pack, and would you rather play it through the developers or the building material and cement names?
So real estate definitely is a big plus. I think real estate in the country has recovered after a lull of about 10-15 years. And typically we've seen, whenever sector comes out of a lull of 10-15 years, the cycle is here to stay for at least 5-6 years. More importantly, from a residential real estate perspective, if you see the affordability index, it's only got more and more affordable over the last 5-7 years. So, and apart from residential, even commercial, as India is doing well on manufacturing side, and slowly, people are coming back to office for work. Even demand in the top 10 cities on the commercial side is surprisingly positive. Is surprising on the positive side. So we find real estate to be very attractive. We are playing it through all the three names actually. We are owning real estate companies, we are owning cement companies, we are also owning building material companies. Essentially, what we are trying to do is that, we are trying to identify companies which have got the right balance of growth and valuations, because the kind of run-up that we've seen over the last 4-5 months, a lot of the stocks, despite having good earnings outlook, have become very, very, very expensive in terms of valuations. So we are owning stocks in all the three things, trying to strike a balance between growth and valuation.
Okay, so that's the take as far as the real estate pack is concerned. Let's slip into a very short break, but as we do that, listen into what the management of Syngene had to say, because of course they have cut down their guidance. They are talking about from the mid-teen kind of the growth that we had seen earlier. They're talking about the early teens now. They have maintained the guidance when it comes to their margins, but definitely a pressure as far as top line is concerned. Listen into that, and then we'll slip in a very short break.
As we stand today, there is a delay in the larger one that we were thinking and talking about. So to that extent, we had to revise that guidance. So now what we've done is, for the rest of the year, we are guiding for a growth of 12% for the year on an organic basis. And if the acquisitions that we are talking about materialize, that will be in addition to what we are saying of 12%.
While growth momentum has continued, the pace has been slow on account of decision-making delays and some stress in the sub-billion customer set. We continue to see growth in IP, which will be driven by digital products and digital manufacturing. There is work that is happening in India where we are leveraging some of the LTTS heritage resources as well. So it's now become one team. So we are guiding at this stage 17.5 to 18.5 and comfortable with the upper part of the spectrum.
We have a very small exposure to the semiconductor side of the comms vertical. A lot of our communications business is driven through either operators, or telecommunication, providers, or the folks who make devices that go into the telecom market, right? So these are the main, focus area for us. We have been able to close the deal in our favor, and it's a multi-year deal and a multi-million-dollar, a large deal in our perspective.
An all-time high during the pandemic, so we are coming off a sort of once-in-a-generational amount of capital flowing into US biotech, and it looks now to be settling out around pre-pandemic levels. Certainly the latest data points suggest that's becoming much more stable. So it feels like a blip. I think margins, the expectation now, margins will be there or thereabouts on what we guided. We said of EBITDA, for example, around 30. I still think we'll come in around 30.
Back with closing trades right here in 80 now, just struggling around that 19,700 print for the index. While we've already breached that mark on the spot Nifty, the futures are just about latching onto it. It's a 0.5% downtake, while sure enough there are some spots of green within the pharma pack, and not Tata Motors. Infosys is actually holding out today, but that's not quite the case with some of the blue chips like Reliance Industries or some of the private banking names, or for that matter even Bajaj Finance, wherein the street is not as enthused by how their margins have panned out. So that is one stock which is definitely quite a big drag, almost a 3% cut coming in there. There's of course LTIM, HDFC Bank, Reliance Industries, ICICI Bank. These are all stocks along with Kotak and SBI and Innocent too, which are dragging and weighing heavy on the indexes. It's actually the same state of affairs even for the broader end of the market, because there as well, it's the declines which are actually taking the lead over the advances. Syngene, Biocon, LTTS, ABB, Piramal Enterprises are some of the big drags. There you go, the mid-cap index down about 1%, and similar is the fate of the small-cap index as well. They're all dragging quite lower as we speak right now. But in the thick of earnings and a lot many to discuss, besides that, you're getting a lot of news flow from within the PSU pack as well. Of course, the Nifty PSE index has been performing very well year to date. And then, of course, you've got a slew of these OFSs as well. The recent one being Hindalco, which has gotten fully subscribed already. You had Coal India as well in the past, a 4,200 crore rupees OFS. You had SJVN, RVNL about 1,400 odd crore rupees. And maybe there's more in store from the government stable as well. So yeah, remember in ITI as well, the government holds about a 90% stake. You've already seen a year-to-date gain for a loss-making company like ITI to the tune of about almost 206%. That's the kind of move that you've seen on the stock already. IRFC, wherein the government has a sizable stake of 86% or a little bit over that actually. It's a 133% move up that you've seen on the stock price on a year-to-date basis. REC, Mazgaon Dock, these are all some of the PSU candidates where the government has a large holding, and they could very well be divestment candidates. Pawan, within the PSU pack and ex-banks, where is it that you find comfort to buy afresh or add positions further, even after the run-up that we've seen in pretty much any and every name?
So I think first on the PSU pack, I think it is to be understood that over the last 10 years, it has been the biggest laggard across sectors, be it financials, be it industrials, be it power, coal, across the board. I think it was one of the most ignored stock or most ignored cohort, I would say. Now, as there have been green shoots across multiple sectors out here, and we are playing it through. One is defense. We believe that government has made some very right moves as far as Make in India is concerned for defense sector. There have been almost 4 or 5 lists of indigenization, and that makes an even more compelling case for defense. So defense is one space where we own a lot of PSU stocks. Apart from defense, we own PSU stocks in some of the lending names. Again, these are essentially franchises which were trading at less than half time price to book. And these are franchises essentially which can grow at more than 15-20%, and even an existing scale of operations, they're making some 15-16% ROEs. So essentially, these are the two buckets within the PSU space where we place our bet.
Taken. So that's the latest coming in on the PSU banking names. So Pawan, on that note, we'll let you go. Thanks so much for making time. But there are a whole host of earnings that we are waiting by. Bajaj Auto is one of those candidates that can come out with its earnings anytime. So let's bring on board Shrishti to get a sense as to what we should be expecting from the company's Q2 performance. Srishti was talking about how the entire two-wheeler space is going to be in focus because, of course, there was a bit of a pickup in terms of the volumes. But what happens on the margin front will also be very critical to watch out for because there was a bit of improvement that we had seen in the last quarter as far as margin is concerned. Is it going to be sustainable this time around or not is, of course, the big question. We can, of course, bring out some graphics as well as Srishti for you shortly to talk to us about just that. But in the meantime, Kunal, let me ask your view on Bajaj Auto.
Well, it looks attractive as a chart. In fact, the last 3 months or so for Bajaj Auto has been quite beneficial because the stock has moved up higher from 4,500, 46 levels, I think in the month of August end, to breaking past about the 50 DMA, making a fresh swing high above 5,200, 270 mark for Bajaj Auto on the spot levels. And now the stock is trying to come back again towards the retest of the previous high. If that gets successful, then we could be looking at the stock not just making a new high altogether, but the chart patterns and the indicators could start to become a lot more bullish for the stock price. So I think particularly I would watch out for the levels of 50 to 70 approximately for Bajaj Auto. If that gets taken out, we could be looking at the stock heading towards a very strong breakout.
Right. In fact, since we're on the subject of Bajaj Auto, let me quickly take it across to Srishti as well. The numbers should be out soon. Srishti, what can we expect?
Well, yes, talking about Bajaj Auto, this time around we are expecting a decent set by the company because do note that this time all the festive period is coming later this particular year. So better to compare the numbers on a sequential basis rather on a YY basis because sequentially we are expecting a jump across all the parameters. In a single digit growth is what we are expecting onto the top line as well as bottom line, and the key to watch will be the margins. This time we are expecting a 19.4% EBITDA margin by the company, and that will be supported by three factors. Firstly is the price hike that the company has taken. Other than that, the kind of product mix, and thirdly, the cool off in the RM cost. All these three factors will support the margins of the company is what we are expecting. About the volumes, not much of a support coming in on a sequential basis. There was just a jump of 3% sequentially, but when we talk about the domestic volumes, they were absolutely flat quarter on quarter, but exports have seen a bump up of 8% on a quarter on quarter basis. So these will factor into the numbers for sure, but key to watch will be the management commentary onto the festive demand, the kind of bookings that they are getting for two of their new offerings with Bajaj Prime Tyre, as well as the rebound in the export market. So all these will be a key to watch out for, but definitely an eye out on the margin figure of Bajaj Auto. Back to you. Okay, thanks Srishti for that. So watching out for all of that. But IndusInd Bank, that too will report its earnings anytime over the course of next couple of hours. Let's go across to Harsh to get a sense as to what to expect. Okay, I guess we'll try and mic him up so that we can get to those expectations. But Nooresh, of course, the entire banking space is coming under quite a bit of pressure today. What's your take on IndusInd Bank and even Kotak Mahindra Bank? Because there was a note this morning saying that the valuations have become very attractive. Is there anything on the charts that one should look at buying into? Nooresh, the question is for you.
Yeah, so IndusInd Bank looks interesting for a breakout going forward. So for the last 3 months, the stock has been in a range of 1350 to 1470. It got contracted a lot more, made a recent low at 1385 at the start of the month. So overall, once it sustains that 1470 mark, it would be a confirmation of a breakout. So for now, it's a buy wherein you keep a strict stop loss below 1380 and add on the way up above 1470. So IndusInd looks promising. It spent a lot of time here around this area. So there could be, if there is some follow-up action going forward, it could be more interesting. Kotak Mahindra Bank, on the other hand, is tough to take a call on. The stock has been very sideways and drifting lower from that 2000 mark quite a few times over the last 2 years. Every time it has come to 2000, it has flipped back to 1650. So it's been a range wherein it has made 4 to 5 attempts around 1650, 1700, 6 to 8 attempts around that 1950, 2000 mark. At 1700, 1750, tough to take a call where it goes first. But would be watching out if it can sustain about 1800. That would be an indication of a short-term reversal.
Well, let's get on board Harsh as well finally to talk to us about the expectations.
Right, IndusInd Bank expected to deliver numbers. Let's first take a look at how loan growth has really shaped up. 5% sequentially, 21% year over year. Solid loan growth clocked by IndusInd Bank. But even more significant is on the deposit side of things. 4% growth on a sequential basis delivered by IndusInd in its operational update. 14% year over year. So whether that deposit growth can hold up is the real question, and that is probably something that will come out of the management commentary. Let's look at the broader P&L. How will it shape up? It's expected to be a good quarter for IndusInd overall. 16% growth on the NII front with NIMs absolutely flat. So you're expecting NII to be around that 5,000 crore mark, maybe slightly higher than 5,000, but roughly 5,000 crore. Let's also look at operating profit expected around the 4,000 crore mark from IndusInd Bank in this quarter. We're also expecting around 1,000 crore odd of provisions to come through. Provisions expected flat sequentially, around 990 crore was the number same time last quarter. So you're expecting provisioning to remain, sanguine, good benign credit cost environment, and therefore credit costs also expected to remain well in control. Profit after tax expected at around the 2,250 crore mark post that provisioning and taxes. So you're expecting profit after tax growth of around 20+%. So healthy on all of those counts. IndusInd Bank, the NIMs will be, of course, in focus. This is a quarter where margins will be in focus. ROA is also expected to see some amount of uptick when I'm looking at it year over year. So expecting a good quarter overall from IndusInd.
Stock though under pressure ahead of those numbers. IndusInd Bank at the session's lows, as is the market and the Nifty Bank. We'll take a very quick break. When we come back, continue tracking markets with Gurmeet Chadha.
Welcome back. Well, the spotlight is on earnings, and tomorrow it will be all about FMCG. It's HUL, ITC, Nestle. All three are going to report its numbers later tomorrow, and the one who's going to be very busy on account of that is going to be Vinny. Vinny, I wouldn't want to be in your shoes tomorrow. Lots of important numbers lined up, but what is the street expecting?
Absolutely, a lot of important numbers, and the first day that we're seeing FMCG company and all three of them coming on the same day, HUL, ITC as well as Nestle. Now in terms of numbers, look at the revenue growth we're expecting for an HUL around 4%, ITC 5%, Nestle a stronger growth of 12.4%. So we're expecting a strong performance actually coming in from Nestle this time around. Volume growth, all of them are expected in those mid-single digit volume growth. HUL similar to last quarter, also last couple of quarters, it's been at around those 3 to 4%. Even this time around, volume growth expected at around 3 to 4%. ITC 5% volume growth this is the cigarette volume growth that we normally talk about in terms of ITC. So yes, cigarette volume growth, important number. That's an inferred number that we watch out for. But yes, it's expected at around 5%. And Nestle, a 6% volume growth is what we're expecting. Margin expansion expected for all three of them this time around. And obviously, raw material prices have come off. And that is the reason that is supporting the overall margin expansion for all three companies. Whether you look at an HUL, ITC or a Nestle, we are expecting an expansion in terms of the margins for all of them. This is the EBITDA margin expansion that we're talking about. Now, let's specifically talk about HUL. What are we watching out for? Obviously, margins, like I mentioned, expansion due to raw material costs being benign. Other than that, what is important also to watch out for, that higher royalties there. So that is why that expansion that we saw in HUL was only 60 basis points versus an ITC and Nestle seeing sharper expansion in terms of margins. Now, home care segment as well as BPC segment is expected to show sharp improvements coming in there. Important to watch out for is the competition that is coming in from regional players. Last time also they had highlighted about this, and that's when we had seen the stock falling in trade after the commentary that came in. So keep an eye out on commentary, especially coming in from HUL. Rural trends, how are regional players doing? Are we seeing tough competition there? What is mass segment doing as well as HFD segment? Are we seeing recovery there? When will we see a recovery there? That's a factor to watch out for. Moving on to ITC, we are expecting strength seen in and strong performance from the cigarette side as well as FMCG business. Agribusiness again expected to be a bit muted, as well as paper also expected to be muted this time around. So maybe the growth in cigarette as well as FMCG business will offset the weakness that we could see in the other segments. Hotel business is expected to see good growth as well. Let's not forget that's a factor to watch out for in terms of the progress that's happening on the demerger front. Any update furthermore in terms of the progress for the hotels demerger is a factor to watch out for. And obviously margins were improving because of the softening in raw material costs as well is what we're expecting. Nestle Q3 numbers calendar year 23 is what they report to. Margins aided by raw material cost softness as well as operating leverage. That will be a key to watch out for in terms of aiding the margins. On the other hand, let's keep an eye out on contribution that comes in from out-of-home consumption. That's important to watch out for as well. What are they highlighting in terms of factors for rural growth, urban growth? How is that shaping up? Also, how is the commentary on milk and nutrition segment? That is important to watch out for in terms of Nestle as well. Let's pull up, how the stock performance been and how the valuations have been. Because when you look at it, HUL has clearly been an underperform on a YTD basis versus an ITC and a Nestle. And seems like, the strong performance that we are expecting in terms of Nestle, some bit of it seems like it's priced in as well. In terms of valuations also, when you look at it, HUL currently is seeing a sharp correction in terms of valuations because the stock has not done pretty much anything. And when you look at it in terms of the forward PE as well, HUL is at 48 times, ITC is at 24 times and Nestle at 64 times. So look at the difference between HUL and Nestle. HUL is still at a discount versus a Nestle as of now as well, and there's a premium, a bit of a premium in terms of Nestle as well. It'll be one to watch out for that how HUL actually doesn't trade in terms of commentary, because that really accounts for a lot of earnings upgrades or downgrades that comes in terms of commentary post that we see for HUL. So keep an eye out on HUL, especially in terms of valuations. That will be a key factor to watch out for as well.
Okay, Vinny, all the best for tomorrow. It's going to be a hectic one to say the least. Gurmeet Chadha as well joins in on the show. Gurmeet, hi, afternoon. Good to have you on the show. Just wondering because the rural consumption trend doesn't seem to be spelling as good. You think urban can make do with it? I mean, ITC, Nestle at least?
So I think would be keenly watching more the commentary, both ITC and HUL. I think they have a better pulse of the rural economy. HUL has almost 10 million outlets, which is by far the largest, almost 2x of the nearest competitor, which is Dabur, in terms of reach. And huge retail presence. I think last quarter they had a 3% volume growth, and they did guide that inflationary pressures are reducing. So we need to see that how much of that, if there's any sequential improvement in volume growth, which they can register. And also, it's not done too well. It's been subdued around 2,500 levels. It trades at about 45 times on FY25 valuation. So although still rich, but at the lower end of what HUL usually trades at. ITC, I think I expect another strong quarter. Their cigarette volume growth even last quarter was 8%, led by market share gains, as well as reduction in the illicit and smuggled trade. And the FMCG business in particular, I think it's at an inflection point. They are now in the double-digit margins as well, and I think should contribute meaningfully. And even paper and agri, which was subdued, should pick up. My sense is with elections coming, we today saw government increasing DA for government employees. You will see more and more rural spending pick up with the crop season, with a lot of announcements, as well as a huge festive season ahead. So I expect actually the rural economy stocks to start picking up a little bit from here on.
Interesting. So other than ITC, Unilever, would you have any other picks to try and cash in on this almost bottom-up story that, the rural end of the market is going to play up in its recovery?
Yeah, so combination, maybe three-pronged approach. One is, the tractors and two-wheeler makers. We are more keen on the ancillaries of two-wheeler makers to begin with. M&M still trades at about 15-16 times. After the RBL investment, it's probably seemed to be a little bit out of favor, I would say. But the broad trend on SUVs is intact. They seem to be doing well. Farm equipment is a large portion of the business. Also, in terms of agrochemicals, I think that's another space which has been quite subdued, other than obviously FMCG and consumer goods. So I think in general, I think the rural-facing economy offers relatively better valuations and some margin of safety vis-a-vis some of the expensive names.
Gurmeet, you're also a close watcher of Bajaj Finance. What explains the 2% cut post earnings? Anything that you found disappointing in the earnings at all, or do you think it's just a bit of a consolidation?
No, I think Bajaj Finance are priced. They always trade at high multiples of, even now it trades at 6-7 book on book. I think the QIP reinforced the confidence of the market that they can sustain 30% plus growth, which, there were some concerns after 2 quarters of slightly soft growth, I would say. And, with 3 lakh crore loan book, average ticket size being so low, if you can still manage net NPA of less than 0.5%, gross NPA of sub 1%, they've been very prudent. I think the risk underwriting is one of amongst the best in the industry. There has been stress test, including COVID. But it's a play on consumption, right? So as I think the festive season picks up, long marriage season ahead, overall Q3 is a better quarter for consumption across the stream. I think it should do well, and so will most of other new age digital lenders like a Poonawalla FinCorp. I think Jio Financial is the latest entrant. In general, I think on credit creation, I'm quite constructive, and any dips as such, I think is a good opportunity to accumulate more.
I think it's the Jio Financial competition which is putting the pressure on Bajaj Finance, or that isn't the case. What's your take?
No, not really. I think Financial will probably take at least 2 to 3 years to probably be at 25%, 30% scale of what Bajaj is. Lending is not that you can suddenly build up a 2 lakh crore. Bajaj took 10 years to get to 3 lakh crore kind of a book. So it's not. In fact, if they grow too fast, then in a bad cycle, we've seen financial suffering. So I think it will carve out a workplace. I think Jio Financial is more a proxy to Bajaj Finserv maybe, because they will incubate, eventually AMC business, broking business, insurance, and they will get into the host of financial services. They already have a payment back license. So I think it will grow its course. It will take 4 or 5 years for it to establish itself. I don't think the comparison is fair at this point of time.
Not a fair comparison. That's between Jio Financials as well as Bajaj Finance. The Bajaj Finance definitely is dragging quite a fair bit today. It's the top Nifty loser, down nearly about 3% as we speak. But let me take it across to Sharad, find out what the dealing room chatter is and what are the stocks that they're talking about this afternoon. Sharad?
Well, yes, in focus we are having Aarti Drugs, and what we are hearing from the dealers is HNI buying is seen across a couple of counters. Now do remember the volumes have also picked up 20 times its 20-day average, and today itself an important technical indicator of 100 DMA was crossed as well. Now the results are expected to come out tomorrow, and expected that the gross margins, they are expected to improve on a year-on-year basis as well as sequential basis because of fall in raw material cost, especially on the organic solvent and the API front. We did a couple of channel checks as well, and it's expected that anti-dumping duty might be announced for a key pharma API. This becomes very beneficial for the company as well. And importantly also, there's a capacity addition coming in for the diabetes segment. That is something which the market is expecting could re-rate the stock as well. The stock has been on a tear as well over the last 3 months as well. But the important buzz is HNI buying is seen ahead of its earnings.
Buying ahead of its earnings. Thanks so much, Sharad, for filling us in of what the chatter is like in the dealing rooms. But Nooresh, let me ask you about ABB India. That one, of course, is reacting negatively to the kind of order inflows, perhaps that the global parent has seen from India. 10% growth. Not sure of what the street was penciling in. And the other one is United Spirits. That's done the trading session because reports are suggesting that UK FTA might not get signed this month, which was the earlier expectation. On the charts?
So, starting with ABB India, the stock has made some bit of a topping out confirmation around that 4600 mark. It made 3 tops around that area, then corrected. We saw a bit of a recovery. Now again, we are back lower. So a break below 4000 opens up a move even towards 3700, 3800 levels. So the short term looks pretty weak. Not a buy at current levels. Would wait for some more a dip towards 3600 to 3800 mark to look out for a dip buy. Otherwise, it's a sell on rise. At the same time, United Spirits is a different stock wherein the stock finally crossed above that highs which were made in 2021 around that 1000 mark. In the near term also, there have been 3 bottoms in August and September around the 980,000 mark. So going forward, that remains a support closer to 1020 to 1040 is where you want to actually buy into the stock on this dip. So United Spirits remains a buy on dip.
That's the take coming in on USL right now. Take a look at the Nifty because now we're at the session lows. We're a good 125 points lower, by the way. 150 points lower for the Nifty spot, and that's quite a low level as opposed to where we were up until yesterday when we were talking about 19,800 being a hurdle. But Kunal, let's just revisit the rates on financials as well as the Nifty Bank, because now Bajaj Finance is down a good 3%. Reliance, and I'm not just talking banks here, some of the blue chips are what's really weighing heavy on the markets. Reliance down, Axis, HDFC, largely of course banks.
Yeah, in fact in the last half an hour the selling is aggravated for large caps, but the buying has also come back into many of the mid cap and the stocks. I think there are many mid cap names which are actually making or recovering from their intraday highs, intraday lows, and making new highs for themselves, or at least coming back to their intraday highs. So I think there's a different amount of pattern which is visible that the large cap names would clearly be under pressure. Even the likes of HDFC Bank, Axis Bank, Kotak Bank, I think these stocks have also gone to a sharp corrective mode. So I think that's one of the major reasons why the markets have been unable to find any kind of a recovery, sustain the breakout about that 90,800 mark. And if the large cap selling intensifies in the next 1 or 2 days, then we could probably be looking at the indices retesting the previous swing lows.
Okay, so that is about some of those heavyweights which are right now weighing heavy at the index level. But it's not all bad, at least for the broader markets. Yes, they are too under pressure, but it's not as deep a cut as we're seeing on some of the banking names. The mid caps and the small caps are too reeling under pressure, but yes, it's the banking space which is down and out. In fact, none of the constituents of Bank Nifty are holding up in the green. It's PSU banking names or the private banks, both are taking 8 on the chin as we speak. Other losers from the broader markets, of course, the Hindalco stock we talked about on account of the OFS. You also have MMTC, which is fairly volatile, KIOCL. Then comes the entire slew of IT companies, right from a Zensa Tech, which has now seen a slide of 6%. In fact, we did speak with the management of Zensa because optically the numbers looked fairly strong. The margins were very resilient despite the kind of wage hikes that they have given. There was a one-time impact which actually supported the margins, but the management has confirmed that they are committing to the mid-teen kind of guidance that they had given on the margin front. Listen into what they had to tell us.
The seasonality of the industry has not gone away. So we expect that like in the past, whatever has been the impact of the furloughs and the lower number of working days and shutdowns, etc., will happen this year also. If we can sustain our pipeline and our order bookings, then obviously Q4 should look better. If we execute well on our pipeline, then Q4 should look better. But I think we will finally see very good, much better momentum. I wouldn't say very good or bad, but much better momentum in Q1 of next year rather than in H2 of this one. Stated goal is to have an EBITDA margin in the 14 to 16% range. Currently, we are at 18.6%. And as I continue to maintain, there is a trade-off between margins and revenue growth. In fact, I look at the overall performance of the company as a sum of margin percentage and revenue growth percentage. So what it means is that if I invest more in my business, that will lead to a higher revenue growth, but may lead to a lower margin, and vice versa also. So for me, it is all about optimizing the net profit or the earnings per share. And that is what we are focused on instead of looking at just revenue growth or just margin percentage.
Getting worse for the market right now. Kunal, any BTST or STBT ideas?
Yeah, it's a mix of one buy and one sell. The first one's about Tata Motors, the stock making a comeback at 665 odd mark. So would suggest a buy with 688 as a target and stop loss at 655. And Birlasoft apparently is a stock which actually is looking like a top out. So would go for a contrast sell on the stock. Targets of 528, stop loss at 560.
Okay, that's an interesting mix of both buy and sell ideas. Nooresh, what's your list looking like?
So two defensive names showing a short-term breakout. First is the buy on Sun Pharma, which is close to a breakout. Stop loss at 1140, target price of 1180. Second is a Bayan Britannia showing a breakout on hourly chart, stop loss at 45.80, target price of 4,700.
Gurmeet, I also want your take about IT, and especially the mid-cap IT. We saw numbers yesterday from LTTS, a guidance cut coming in, Happiest Mind, another guidance cut, whereas Tata Elxsi managed to beat expectations. It was a decent set from Zensar, but the street seems to be, taking into account the other factors as well, and that's where the stock is down. And today, of course, you have LTI, Mindtree, Wipro, and Persistent. Lots really to track, but in terms of stock-specific call, if you had to take a bet within IT, which stocks come to mind?
So I think the market is rewarding good performance and punishing any subdued performance. We saw HCL Tech report a decent quarter, and HCL is, the spends, if you see, are more non-discretionary in nature. A lot of them is infra, ERP, etc. So they actually don't do that badly in a tough cycle. At the same time, they don't do as well when the cycle picks up. So there, the valuations also were more reasonable. But in case of Infi and others, since there was a guidance cut, the market did react. But on the large cap IT, I think because of the continued underperformance, there is some bit of I would say some negative news is in the price. I think a lot of the deals are happening, but the revenue translation is slow. So they are getting more longer term contracts, and the conversion would be more granular as the economic outlook picks up. We are more selective here. We like KPIT, which is more an auto case mobility led space. We like Persistent, and large cap we are more comfortable with HCL Tech.
That point is taken as far as Gurmeet that is concerned, but on the losing side, the market is ending on the back foot. Okay, beg your pardon. As far as the market is concerned, we are at the lowest point of the trading session, 19,665 is where we are ending shop. It's the broader markets which have been worse today. It's the advance decline ratio which is not looking healthy at all. It's the private banking names which are coming under pressure. Nifty Bank down almost 500 points. Whether it's the private names like HDFC Bank, ICICI Bank, Kotak Mahindra Bank, they're all down in the trading session, and Bajaj Finance too taking it on the chin. It was a smooth quarter, but it was a 3% cut that we have seen on the stock today. What else is the one which is buzzing around? It's Pharma, which is doing okay. So Cipla, Dr. Reddy, Sun Pharma, they managed to eke out gains. A lot of stocks reacting to earnings. So LTTS, Zensar, Tata Elxsi, even ICICI Securities, Huhtamaki, all of these stocks were big movers on account of earnings. We're watching out for earnings from Bajaj Auto. That's going a bit weak into the numbers. Ditto can be said for LTI, Mindtree, Wipro, as well as IndusInd Bank. So Street not expecting too much from the earnings. And of course, tomorrow will be the day of the FMCG earnings. So ITC, HUL, Nestle, they were all coming under pressure ahead of their earnings tomorrow. But that's how we're wrapping up the trading session. Thanks so much for being with us.